In this video, I'm going to teach you my top-down analysis approach using volume profile, gamma exposure, and order flow or ICT. So if you don't have an order flow tool, you can use ICT, right? So I'm going to go over each concept one by one, right? I'm going to explain each and everything. So by the end of this video, you will have complete understanding of all these concepts. It doesn't matter if you're like, a beginner with order flow or like with volume profile, because I'm going to go over each and everything in detail. So stick around till the end because you don't want to miss out on anything, because there's going to be a lot of sauce in this video. And just hit the subscribe button. Yeah, let's start. So first of all, we need to understand about the volume profile, right? So I have a volume profile over here. So you can use volume profile on TradingView. However, I suggest that you use it with the order flow tool because that's the actual volume profile, considering the actual volume. On the TradingView, it's just considering the tick data, but it's still accurate, right? To some degree, I can still use it. If I didn't have order flow, I would use this. It's accurate. So volume profile has three main components, right? Three levels. So we have point of control, where the highest amount of time was spent by the price. So price spent a lot of time here, right? And there was a lot of volume build up here. This is called a balanced area, right? Where price just stalled. So whenever price comes back to this level, we can expect consolidation like this, okay? And then we have the value area high, and this is the value area low. So everything inside, in between the value area high and value area low, is considered a fair value, a balanced price, right? Or a fair value, okay? Because all the participants were happy inside this balance, and that's why we built a lot of volume here. So 70% of the volume is transacted within the value area high and value area low. So anything below the value area low, when we're out of balance, it's considered to be abnormally, right? It is not normal. So there are two things that can happen when price goes above the value area high or the value area low. We can get a failed auction setup. So we peak below the value area low, and then we get an instant reclaim above, and then we can take a long, and we can target the point of control as our break-even zone or full TP most of the time. And I'm gonna go over how you can identify if price is gonna like explode to the upside or just go over here and then reverse, right? Or what price can do essentially is it can break out of the value area low, and then it just will continue pushing down. So with the gamma exposure, right? With the gamma exposure and the gamma regime and gamma levels, we will be able to identify if we're going to get failed auction setups or we're not going to get them, right? So this is volume profile, and you can use the volume profile simply by going over here into this and then choosing fixed range volume profile. So for an example, just so you can copy my settings, I'm going to draw it randomly on the chart, right? So these are my settings. So double click on this. In the inputs, set your row size to 200, value area volume to 70, then go to styles. Check this value area high and value area low, and width of the box, set it to 70. That's pretty much it. And you can see that we can already see what's happening here. So we are having failed auction setup here. So we went above the value area high, we got an instant reclaim, and now we pushed back below, right? So these are called failed auction setups, when price peaks above the value area high and then it reverses, right? So the next target when that happens, when price reclaims the value area high, because this is abnormally, right? This was the balanced price that was within the value area high and value area low. When price peaks above it, that is not normal, okay? But it depends on the gamma condition if it's normal or not, right? And this is a failed auction setup playing out right now. So how do we know if we're going to get a breakout above the value area high or low, or we're just going to get failed auction setup? And that's where the gamma exposure, the gamma regime comes into play. The most important and game-changing tool that I've used so far in my entire career. It literally just changed my trading from like 60% to like 80%, right? And I use this platform called Mentor Q, okay? And it basically tells me if we are in a negative or a positive gamma regime. So first of all, let's go over What is a positive gamma regime and what is a negative gamma regime? When we are in a positive gamma regime, so if we are in a positive gamma regime, right, we will expect failed auction setups to play out. Why? Because when we are in a positive gamma regime, the dealers are forced to hedge against the price. So if price is going up, they're going to sell. If price is going down, they're going to buy, of course, at the key levels. And that's how they're going to hedge, right? Because they're forced to do that in a positive gamma regime to protect their positions, right? So in simple words, when we are in a positive gamma regime, we can expect failed auction setups to play out. And then I'm going to teach you the entire strategy later on in the video. But I want to explain you all the concepts, right? So we have two types of, and also let's talk about the negative gamma regime. So negative gamma regime is when it's a type of gamma condition where if price is going up, the dealers will be forced to hedge with the price. So they will add into the position wherever the market is going, they're going to buy with it. So if it's going up, they're going to buy. So in these type of situations, in a negative gamma environment, we tend to see breakouts successfully happening. So the breakout happens, let's say above the value area high over here with order flow confirmation or ICT confirmation, which I'm going to teach later on in the video. And then we can expect high volatile moves. So in a negative gamma regime, we're going to have volatility. In a positive gamma regime, we're going to have a balanced price action, consolidation most of the time, but you can fade the edges like this. I'm going to give you the timing of the volume profile and how to frame your trades, each and everything in this video, guys. You don't want to miss out on anything. So let's talk about how to find your key levels and how to actually find the real-time gamma condition, right? So the gamma exposure can change throughout the day. Sometimes it can flip to negative gamma regime. Sometimes it can flip to positive gamma regime. So we need to have a tool that actually tells us what's the gamma condition at that specific time. And then we can base our trade ideas around that, okay? So Mentor Q, there's a link down in the description. I highly suggest that you get this tool. It is the tool that I've been using, and it's just completely changed my trading. So there's a link down in the description, 30% discount if you use that link. And let's talk about this. So when you are here, right, you're going to have this dashboard. So over here, I'm going to go to NQ. This is what I'm trading, right? I'm going to click on here. Now it's showing me EOD at the moment, right? Gamma inside end of day. End of day is basically looking at the previous day gamma and giving you the condition, right? So the previous day was negative. But we need, so these levels, like this gamma condition, right, is important, the end of day ones, for swing trading. So it literally gives you like the overall picture of the market. But for intraday traders like us, we don't really need to focus on that, right? According to my strategy. So end of day levels, yeah, it gives you the bigger picture. We are overall in a negative gamma regime. But we need intraday bias, right? So over here, if I go here, there's this intraday summary, right? If I click on over here, you can see that the last update happened at 4:50, right? And that is literally like, it updates after every 5 minutes. So we were negative when we opened up on today, right? During Asia. But now we have flipped, like a while ago, we flipped into positive gamma regime. And now we can expect failed auction setups to play out quite often. So you can see over here, we flipped to positive gamma regime, and we can see that price reverses down here. And now we go to the point of control. So during the positive gamma regime, you should always take your profits at the point of control, because it's very unlikely that price will break through this level, right? Because they are forced to hedge against the market. So at a key level, this is like a support level when we're coming down, right? It's very unlikely that we will see a successful breakout because we are in a positive gamma regime. So simply I have NQ over here, and then I click on this tool over here, intraday summary, right? And then I refresh this, and it is telling me we are in a positive gamma regime. We're going to see failed auction setups. We're going to see breakouts failing. If this was in a negative gamma regime, I would be waiting for breakouts. Now, the most important thing about this tool, guys, are the key levels that it gives you. So we have a couple of key levels, right? So we have put support level. We have, so let me just go over here to the chart here. So you can open chart, and trading view is integrated in this, right? So I'm just going to disable this, and I'm going to go to indicators over here. And what I do for my levels, right? This is very important. I convert the QQQ, which is options, right? QQQ levels to NQ, and they are way precise, right? I'm gonna explain everything, guys. If you're confused at the moment, don't worry. I promise you by the end of this video, everything will be clear. So what you wanna do is when you go to the charts over here, go to indicators, right? And then you wanna type in, first of all, you wanna add in the conversion indicator, okay? Now, once you have the conversion indicator on, you want to go to settings over here. And what you can do is go over here to gamma levels intraday, right? And then you want to type in QQQ and Q1. Now, these levels are not going to update. Why? Because we are looking at QQQ, and QQQ only updates after the market open. So I'm looking at before the market open. So what we can do here is go to indicators and choose gamma levels intraday as well. Okay. And now it's showing me the intraday levels that are updating consistently. So we have CR over here. And also, like, I go into the settings here and I disable some levels. So this is called resistance, put support, HVL. And pretty much this is what I keep on, right? So 1 day minimum, 1 day max, call resistance, put support, HVL, gamma wall, GX1, GX2, GX3. The 1 day minimum is where the price will drop. Like, this is the least that price can go towards, right? It's the minimum, like the lowest point of the day. It's like a range. It's giving you a range. So from 1 day minimum to 1 day max, it's like the highest probability reversal zones. So if price reaches the 1 day max level, there's a very high chance that it's going to act as a resistance level and the price will drop or just consolidate around it. It's not going to go higher. Okay. And then we have call resistance 0DT, which is also by the name, it already says it. It's a call resistance. It's a resistance zone, right? Where huge exposure, gamma exposure was there. So we can consider this as a very strong resistance level. Then we have put support, as the name says it. It's going to act as a support level, very strong. Then we have H, high volatility level. So in very fractal basis, it's going to tell you if we are flipping to negative or positive gamma regime, right? So once we have, like, let's just go over here. So we have HVL over here, 0DTE. When we are above the HVL, okay, it's showing you that we are in a positive gamma regime. When we are below the HVL and we're accepting prices lower, right, we can expect volatility, right? We can expect volatile moves happening. So pretty much what I do now is I have these levels, right? I have these levels marked out on my trading view before 9:30 open. Okay, so here's what I do. Okay, this is what I do, right? So let's just go over here. So first of all, you want to plot your volume profile from 18 till 9:30 a.m. New York time. Okay. This is going to be your overnight volume profile. Okay. Now let's assume that we are in a positive gamma regime on intraday basis. And we either have a QQQ level converted to NQ above the value area high, or just a simple NQ intraday levels that are updating after every 5 minutes. Right? So you can see I updated this, and now we are still in positive gamma regime. So let's say that in a positive gamma regime, we are looking for failed auction setups, right? After 9:30 a.m. If you haven't watched my previous volume profile videos, make sure you watch them. So if there is a gamma level, so let's say there is GEX1 level over here. So G2, G1, G3, these are also like your key levels, very strong levels, right? Now let's label this as, Let's call this as like this. Actually, this. Let's call this Gex 3. Right now, considering the fact that we are in a positive gamma regime, after 9:30 open, right, we are waiting for price to go above the value area high first, out of the balance, and then also tap into the GX3 level, the gamma level. Now, once that happens, guys, right, this is the highest probability failed auction setup that you can take, of course, with confirmation. And that's where order flow or ICT comes in. Okay, so we can use either order flow or ICT. And for order flow, I use Deep Charts, my most favorite platform. Literally just so like very user friendly. So I finally partnered up with them. There's a link down in the description. You can get up to 25% off. It's crazy, guys. This is like the best order flow tool in my opinion. And I'm not saying this just because I'm affiliated with them. I just got affiliated with them recently, and because they deserve it, right? It's the best tool out there in my opinion. S tier. So here's what I would do. On the 1 minute, when price taps into the GX3 level in a positive gamma regime, we are waiting for, first of all, let's talk about order flow confirmation, right? So a lot of aggressive buyers stepping in, aggressive bubbles, buying bubbles, right? Let's just zoom in here a bit. And when price taps into the GX3 level, we see failure to break above it, right? So something like this. And we have more aggressive buyers hitting the wall here, but not getting a follow through. So a lot of aggressive buyers, but no follow through. High effort, no reward at a key level above the value area high in a positive gamma regime. This is literally the best structured way of trading. One of the best ways, right? I'm not saying this is the only way to take high probability setups, of course. So once you see all these buyers stepping in but getting no follow through, that is step one. Step two, we need aggressive sellers to step in and show a follow through. So from here onwards, when I see that a lot of aggressive buyers are stepping in, but they're not able to break above this level, or they slightly did break above it, but then immediately we reverse below, we see aggressive selling stepping in. Okay. And we see aggressive seller here, aggressive seller here, aggressive seller here, and now they're getting a follow through. And if you look to the left side, we had these aggressive buyers previously, right, that initiated the move towards this key level. So that is step two, looking for aggressive sellers to step in and getting a follow through after buyers getting absorbed. And step three is waiting for price to close below these aggressive participants, these buyers that push the price up towards that key level. Once we have all of these three criteria met, we can take our short position, right? We can put our stop right above the GX3 level over here, and we can target either this over here, right? The value area high, right? If we are above it, if the price is above it, we can target this as like a break-even zone or a partial zone. And then for our final TP, we can go for point of control, because this is the fair value. This is like a magnet, right? This is where price will revert towards. And this is how you pretty much trade with order flow in a positive gamma regime, right? Now let's talk about ICT, how you would use this with ICT, right? If you don't have order flow, it's completely fine. I got you, okay? So let's just remove, okay, never mind. Let's just remove all of this. Oh my God. Uh-oh. Perfect, okay. So simply put, when we tap into this level, you wanna go to the 2-minute time frame and you wanna look for a market structure shift or any type of confirmation entry. So this could be, we break this low. So price goes down, breaks this level. You can take your entry like this, or you can wait for inversion, right? So we have a bullish fair value gap, price inverses below it. That is your entry. You can also use a breaker block So let's say we have a breaker over here, right? Price closes below it, and then you can take your entry. Simple as that. So if you don't have access to order flow, which I highly recommend you do, right? Because you can also confirm like your ICT setups with order flow. It's not a ideology. Order flow is not an ideology. It's not something that you should only trade with, not the only thing, but it's something that you combine with other, like your strategy itself, to give you more conviction in your setups. I just hate people who say, oh, so you used to only trade with ICT, now you're combining both of them. Like, come on, bro. At the end of the day, I'm always trying to improve, right? And this has just changed my trading, literally, when combining all of these concepts together. So let's say we have GX3 level here, but we also have a call resistance up here, okay? And if we see absorption here, that's good. But if we don't see absorption here, but we're still in a positive gamma regime, we can go up towards this level and then see a setup form. Okay, so you gotta look for absorption at these levels, or ICT type of pattern at these levels in a positive gamma regime above the value area high if you're looking for shots. And we are looking for shots because we're in a positive gamma regime. So we tapped into a key resistance level. We are out of the value area high. So when in the positive gamma regime, the dealers are forced to hedge against the price. So if price is going up, they're going to sell. If price is going down, they're going to buy, right? Of course, at the key levels. So context matters. Now, let's finally talk about the negative gamma regime and how you would trade it using the Gex levels. So let's say we are in a negative gamma regime. And let's say that we have, again, GEX3 level here, above the volume profile, and we also have GX2 level here, and let's say that we have a call resistance up here. So same timing from 18 till 9:30, right? We are in a negative gamma regime, so breakouts are expected, and also the HVL is above here, HVL 0 DTE, which is basically, it means that we are on a very fractal basis, right? We are still in a negative gamma regime. So intraday regime, you know, it's negative. If for this example, the fractal regime is also like negative. So that gives you conviction. So after 9:30, we are waiting for, first of all, price to break above the value area high. And then simply put, when we see a break above the GX3 level, so when we are in a negative regime, we are not looking for reversals. We are only looking for breakouts. And if there's no breakout, we are not looking for a trade. So on the 1 minute time frame, when we see price closing above it, we need to confirm that with order flow. So we need to see aggressive buyers stepping in that cause the break, and they should be getting a follow through. What is a follow through when we see aggressive buyers in a bullish candle? So let's assume this is a bullish candle, and we have a wick to the upside and to the downside. So if we get aggressive buyers at the wick area, I'm going to show the examples as well, guys, so don't worry. If we have aggressive buyers in the wick area, that is not a follow through. That is buyers getting absorbed. At the wick, we saw rejection. After buyers stepped in, we had a rejection and we closed here. But if we see aggressive buyers within the body of the candle, okay, and not the wick, only the body, that is a proper follow through. So it means that they were rewarded for their effort. Okay, so that's what we want to see when we break above the GX3 level. If we don't see it initially after the break, we can wait for a retest of the GX3 level like this, and then we can look for absorption of sellers. So some aggressive sellers stepping in, but not really able to hold below this level. And then we see either the aggressive buyer stepping in or a structure break, and then we take a long. And for our targets, since it's a volatile market, we can target the next level here. So GX2 is going to be our final target. And if we manage to break over the GX2 level with order flow confirmation, we target the call resistance, which is the strongest resistance level. So we can expect some movement to the downside. But if we have 1 day max level, and by the way, all these levels are going to be plotted on this chart over here. So you can take reference, right, where these levels are. You can plot them on the trading view itself. Literally game changing. And the maximum that it can go to is, of course, where there's always a chance it's going to break it as well, is the 1 day max level. Okay. And bam, just like that. Now, how you would trade this with ICT? Quite simple. So let me just go over here. So if you're not looking at order flow, you pretty much, first of all, wait for a break above this, right? GX3 level. And then you either wait for a 5-minute fair value gap to form in this leg, or we tap into this level after creating some form of structure on the 1-minute time frame. So like this. So we have a lower low, lower high, lower low, and we retested this level. Then simply put, we are waiting for price to break above this as your aggressive entry, or we can then wait for a break above this high for a very safe entry, and price will continue towards the upside. Okay, quite simple, guys. So by now, I believe everything is clear. So these levels are going to be updating. You know, you can check the gamma regime. It's going to change. So let's assume that we are in a failed auction setup trade, right? When we are in a failed auction setup trade, and you think like, okay, maybe the gamma regime is going to shift negative. You have this fear, right? We are in a positive regime. You're taking a failed auction setup. What if the gamma regime shifts? It cannot until we cross above the HVL 0DT. Sorry, below the 0DT. My apologies. Below the 0DT, right? So when we are in this short position, and we're above the HVL, it still means that we are in a positive gamma region. So don't worry, okay? But once we go below it, that's a sign of caution. We can either just keep pushing down from here, or we reverse, break above, not break above, but like it also gives like a boost to your actual trade. If you break below the HVL, right, it's gonna keep on pushing down. Simple as that, guys. So let me give you guys some examples. All right, guys, so here is an example. I'll try my best to give you examples because it's really hard to get historical intraday levels and gamma regime. But we can use the end of day levels just for the sake of the examples, right? Because there's no possibility. So when you're trading live, right, these levels are going to be way accurate and way precise. So we can take our gamma regime idea from the HVL, right? So we are above the HVL 0 DTE. So we are in a positive gamma regime during intraday basis, right? On intraday basis. So we can expect failed auction setups to play out from the overnight volume profile. So on the deep charts, right, the Orderflow platform, I have the overnight volume profile drawn out over here, right? As you can see over here, we have the value area high, the point of control, VWAP, and value area low. So after 9:30, so by the way, 8:30 on deep charts is 9:30. It is 1 hour behind. It's just a timing issue, so don't worry. So from 18, so that would be like from 17 till 8:30 on deep charts, right? So what you can see here, guys, we are in a positive gamma regime, right? But just looking at the historical end of day data, right? But we are above the HVL 0 DTE, so we are in a positive regime. So we go above the value area high here. And let's also look at here. So we have G9, GX9 level over here. So this is where we open at 9:30, right? We go up and we tap into this level. Now, even though we have a breakout here, we are not expecting this breakout to play out. Why? Because we're in a positive gamma regime. So by looking just at the ICT concepts, we see this displacement to the downside with market structure shift, right? And then we tap into the premium zone, this order block over here, right? These consecutive green candles, or even at the retest, you could have taken a short position, right? And then you could have potentially targeted all these levels here, right? So we have the 1 day max over here, the call resistance over here, the G3 level here, right? And then we finally broke below the HVL over here. And that's where we start consolidating. We are making our mind. If we break below the G2 level, we're going to see continuation to the downside. But what happens is that we start pushing up. So this is how you would take your entry using ICT. But if I go over here on Orderflow tool, there was the G9 level right around here. And what you can see is that, let me just really see where it was. So it's at 30200, right? Again, these levels are not really precise because this historical data. 30200, it's around here. Okay, perfect. So we go above here, right? Also looking at this tool over here, we have delta at the left side. So we have aggressive sellers around this area, and we have low volume node, right? So that's more precision. Of course, that's when you get good with the order flow, you'll be able to see these things. But what is essentially is happening here, guys, is notice what happens, right? So even though the first time when we went above, we see all these aggressive buyers stepping in right over here. But then since we're not expecting a breakout, we see aggressive sellers stepping in, aggressive sellers stepping in, and then we go back up again. So that's a sign of caution. You could have taken your entry right here, right, with the market structure shift. But notice when we close below the level, the GX9 level once again, we see aggressive sellers in the body, right? Here, we have aggressive sellers in the wick area. Over here, we have aggressive sellers in the body. And then we retest and look at that. All these absorbed buyers. And that's pretty much a short position. So let's move on to the next example. All right, guys. So here's an example from the previous day, right? So we're looking at 1st July over here, right? So you can see that we were trading above the HVL0 DTE. So it means that we are in a positive regime. So we can expect what? We can expect failed auction setups to play out. Unless we broke below the HVL and we hold below it. So if we broke the G3 level, which is slightly below it, we would then shift into a negative regime and we would see then breakouts happening to the downside, right? But what exactly happened here is that for this day, we have the overnight volume profile drawn out from 18 till 9:30, which is from 17 till 8:30 on deep charts. Again, timing issue. So after the market opened at 8:30, right, you can see that we are already below the value area low, but we need a key level below it, the gamma level. And if you look at it here closely, what do we have? We have the GEX3 level, right? And also we have the HVL level, okay? So we tapped exactly into the G3 level, as you guys can see. This is historical accurate data, okay, by the way. And these are not like even like pinpoint accurate because I'm not looking at the actual, which is going to be even more precise when you go and see it in the live market, right? So going over here, this is a G3 level, right? We tap into this level here and notice what is happening here, guys. We see all these sellers, aggressive sellers tapping into this level and getting absorbed here, right? And then for ICT confirmation, you could have simply taken this inversion setup to the upside, right? So we have this IFVG here. This would have been your entry, right? And you could have potentially targeted what? Let's just check, right? So let's just go here. Let's go here. And what do we have here? We have the call resistance level, guys. Again, we have call resistance level here, guys. And we are now above the HVL. So what happens at the call resistance level? We reverse down, right? So we reverse from here first and then from here as well. So this is your ICT entry. And then we have call resistance in a positive gamma regime here. So again, around this level, we see a lot of these aggressive buyers stepping in, but no follow through. And then we close below this cluster, right? We also, what do we have? We have a market structure shift here. That is your another entry, right? We then come back up here again. What do we see? A lot of aggressive buyers stepping in, but pretty much no follow through. And then over here, we have a bearish candle with absorbed buyers, bearish candle with absorbed buyers. This would have been my short position using order flow. And then of course you could have also looked for inversion using ICT and whatnot. Let me give you guys one example for negative regime. But I promise you guys, it may sound a bit confusing. Like you'd be like, what the hell am I even talking about? Right? It's simple, guys. When we're in a positive gamma regime, we can expect levels, we can expect the resistance level to hold the price down, and we can expect the support level to hold the price up. When we are in a negative regime, right, we can expect the resistance level to be broken, and we can expect the support level to be broken, right? Let's move on to the negative gamma example. All right, guys, so this is going to be the final example in a negative gamma regime, okay? Even though we shouldn't be looking at end of day levels, right? So we can only take our reference from the HVL level. Again, when you are trading live, looking at the intraday, right, it's gonna like plot the actual levels if you look at the chart over here. But I know, because I traded on 7 July, we were in a negative gamma regime, right, as you can see over here as well. So going over here, when we opened up, right, we were above the HVL, so we were in a positive regime. But notice what happened here. We managed to close below the HVL here, so we don't really want to like switch our bias instantly, right? We need to see price holding around this level, right? And then we had G1 level here. So if we broke G1 level here, the GX1 level, then that would confirm that we have switched to a negative gamma regime, right? But it doesn't mean that if we are in a negative gamma regime, we're gonna keep on pushing in one direction, even though the dealers are gonna sell if the price is going down, and they're gonna buy if the price is going up, right? They're gonna hedge if the price is going up. But price can also reverse from these key levels, and that's why we use order flow to confirm the breakouts and also like mean reverting trades, right? So once we broke below the G1 level here, which is at 29,500, right? 29,500. So let's mark out 29,500 around here. Perfect. Now let's just do that over here. Okay, so cool. So first we broke below the value area low of the overnight session, and then we had this this G1 level, right? Gex 1. So let's just decrease the order size by a little bit. It's set at 80, so let's do 55. That should be nice. All right, cool. So what happens here, guys? When price approaches this level, what we see is aggressive buyers stepping into 61 buyers, but within the wick of the candle. And then we see aggressive sellers at the retest of this level after we broke it in a negative gamma regime. And these sellers are in the upper wick, right, in a bearish candle. So what does that tell you? That the sellers got a follow through, right? If the sellers were inside here in this lower wick, then the sellers were absorbed, so we would wait for more confirmation. So this right here would be your short position, right? You would take a short position here, put your stop right up here, right? And then you would target the next key level. So in this case, you would have caught this insane breakout to the downside. So that's going to be it, guys. I wish I could give you proper examples, but once you get the platform, you'll be able to see it by yourself. I've tried my best. You can trade it like this as well, the way that I showed you examples. But the best way is to look at the intraday levels while they are updating after every 5 minutes, and the levels are going to update as well. So you can see that we took a short position here, right, from after seeing aggressive sellers, and you could have targeted the next level. And you can get access to MentorQ and Deep Charts with huge discounts. So Deep Charts is 25% off, and MentorQ is 30% off if you use the links down in the description. I'll see you guys in the next one. Take care. Goodbye.